I'm Ira Epstein, and obviously what's on everyone's mind is when is the Fed going to start cutting interest rates and taking us away from this restrictive interest rate hike cycle? That's the big question that we're all asking, and it's going to be upon us. But before we get too far, please take a look at our disclaimer. Have to put this up in order to comply with the government, and from there we can move on. Now, the last time the Federal Reserve lowered rates, believe it or not, was March 2020 at the start of the COVID pandemic. It got going, and obviously we'd never seen anything like this in common times, modern times, and the Fed was questioning, what does it do? Well, as it turns out, the rate breaking cycle, as it's called, took the rates down to between 0.25% before the Fed embarked on a rate hiking cycle. And the rate hiking cycle began March of 22. So we're not 2 years into it. We're about 1.5 years into it at this point in time through today. In the rate hiking cycle, the officials raised rates a total of 11 times to the current range of 5.25% to 5.5%. The last rate hike took place over a year ago. It doesn't seem like that, does it? But over a year ago, July 2023, and the restrictive rate policy has taken rates approximately, in terms of the interest rate when it got restrictive, it took inflation down from 9% all the way down to where it's at right now, just close to 3% or under it. In fact, take a look at this chart. When you're looking at the chart, you can see how we peaked out 2022 inflation and then how it's been coming down, and it's still coming down. Another thing that you have to consider when you're looking at this is unemployment. Now, you're getting an adjustment to the quarterly unemployment numbers, and that comes out 55 to 75 days after they're first published at the end of a quarter. We're already hearing from a number of firms that they're thinking that we have understated the unemployment from anywhere from 375,000 to 1 million jobs. That's quite a bit. So that brings me to the question that if they've understated that, in other words, there's more people unemployed, wouldn't that mean that the unemployment rate is higher? I would think so. But what we know so far, when you look at how the economy's going, we're not in a recession, so that can't be the reason to cut. But one of the reasons to cut is pretty clear: the normalization of rates. Because if you stay restrictive too long, history shows you can cause a recession. You don't want to see that. Another reason is to get back to what's called normalization, or a neutral rate of interest. Now, that's the difficult one. It's where you neither stimulate nor restrict economic activity. You just don't go from raising like we did 11 times to making a cut and you're suddenly back to normal. Doesn't work that way. So you've got to come down, play the game as the market comes down a little bit, and just like a baker, you're trying to get the mix just right where you can get to what's called a normal interest rate, where interest equates to about inflation. So the idea now is for the Fed to get ahead of the curve. We've heard that for over the past year, but it's probably coming. And the big question is going to be not at Jackson Hole, because the Fed won't spill the beans there. It'll be in the September FOMC meeting, when they get a chance to see another set of CPIs just before PPIs, and of course the August labor numbers. And if they get an adjustment off the quarterly, and if we see that we still have a pattern where we're getting problems with all this, well, I think it opens the door for the Fed to make rate cuts. Now the question is how big. If the numbers say that the unemployment number is higher than the 4.3, why wouldn't they go 50% on the first cut and then maybe 25 or maybe another 50% after that? It's hard to tell. But if there's no big adjustments to the unemployment, it's just sitting here at the 4.3%, well, they may surprise you and just go 1/4 point, see how things go, another 1/4 point, see how things go, so on and so forth. In summary, the one thing I think you can expect is rate cuts are coming. They'll probably be bullish the gold market, bearish the US dollar, and bullish the stock market, although the stock market at first might do a bit of a swoon because of the buy the rumor, sell the fact. I'm Ira Epstein. We'll be watching to see how this all plays out. See you in my next report.